Stop right there before you buy a funded account. Before you put money into the market, I need you to do this one exercise. It's called backtesting. If you're not familiar with backtesting, it is simply a way for you to test your trading strategy to see if it's applicable or if it holds the test of time when you actually do bring it into the live market. We're going to break down the A to Z on how to document your best setups, how to classify them, how to categorize them, and ultimately how to use that information to help you pass funded accounts or just scale your own personal capital. For this video, we will be using the TradeZella Backtesting 2.0 feature. I find this to be the best. You're more than welcome to use whatever you like, but this is the platform I use. And I will also be providing a free resource on how to track this data on your own. That way you don't have to keep it on TradeZella. You can keep it in your own personal journal. Let's hop over to TradeZella and we'll start picking this apart. So as you can see on TradeZella, I've done a little bit of this. I've experimented with the platform. I've been trying it out, seeing what I like and what I dislike. And overall, I think this is one of the best platforms because I already have TradeZella. And I don't have to go out of my way to get another subscription, just one to track my trades and also backtest my best strategies. What we want to be getting into here is essentially we're going to just create a session, right? We can call this our test session. And you put a description, whatever you want. You're going to go ahead, you could connect this to a playbook if you already have those configured. However, for this tutorial and this video, we're just going to go through a backtest on NASDAQ. We're going to be trading futures, looking at NASDAQ. Even if you trade the smaller contracts, micro NASDAQ, I find that using the regular NASDAQ contract will be better for you. It just seems to be a little more fluid. I don't know if that's just me, but from what I've seen, it looks a little cleaner when you do use a full-size contract. Starting balance could be anything. If you're trading a funded account, you have to consider what is your actual drawdown. That's what you should be focusing on. So for example, if you're using a $150K instant funded account where your drawdown might be $6,500, you could put something like that, right? $6,500 and understand that once you hit that drawdown, or maybe it's $6,750, maybe you get a little extra, that level, you're done for. You're done for. Maybe your daily loss is half that, maybe $3,750. The point is, with backtesting, you want to be testing it towards the environment you have. Don't make it hypothetical. Don't do anything like that. So we can look at it like this and we would say, what is our start date? We could pretty much pick any day out of recent time. Let's just say we want to backtest, let's just do March. We're nearing the almost the end of March, believe it or not. We could look at March. Say we have 6,500 in drawdown. We're going to be using one mini NASDAQ. Create session. Before we get into the charts, I'm going to make this a little more palatable for myself. I don't trade like this. My charts do not look like this. So I'm going to simply just see if I can apply a simple grid, right? A grid. So 3 charts. I'm looking at 3 different time frames. You're going to want to go ahead, link these, right? You don't need to link those, but you want to link the chart so it's the same symbol. You just link it right there. And then that way, when you change one or, you want it all in the same thing. The point is that you want it all in the same thing. With this, we're going to look at 3 different time frames. So I will typically rotate between a daily, a 60-minute, a 30-minute, 15-minute, whatever. But I do like to change a couple things on the backtesting feature. You can have the candlesticks paint as fast as you want. So for this one, I like having them go a little quicker. I'll give you an example of what it looks like. So you can see how it prints. And then you can see also, if you're looking at these different time frames, and let me just make sure that you guys can actually see what I'm doing right here. Yes. So if you look at the different time frames, you can notice that these candles actually correspond with the 1-minute time frame movements. I really, really, really like that because you got to think as a trader, you're going to spend so much time focused on your execution time frame while you see in the background this 5-minute chart painting, right? Or this could be the 15-minute if you trade on the 5-minute. The point is the higher time frame will flicker while your entries are, playing out. So when you're able to see this, it really does give you some tangible real world experience because you can take that same visual learning that you're doing here and bring it into the markets. So not to bore you too much with that, but those are the settings I like to use. I'm going to be specifically focusing on trading the New York Open, right? So we want to make sure that our entries are going to be around the New York Open. That is my model. When you are thinking of a model, you want to make sure that up front, you're defining a few characteristics. So for me, some of the stuff that I teach within my mentorship, I have a model we call Model 123. It's not crazy. It's very simple. It's just something that I can point to and say, that's that. Call it, so it has a name, right? 1, 2, 3. You got 3 variables. So with this particularly, let's go ahead and look at prior day high, prior day low. We'll call that our level. And then number 2, we're going to pick some sort of entry model, right? So maybe we want to enter on the 5-minute structure, but we might execute on the 1 minute. So the idea is we need for our entry time frame or our entry confirmation, we want to see the time frames stacked, both the 1 and 5. And then we also want to maybe see some sort of clear target. Those are the parameters that we're looking for. So let's just say we are going to enter when we sweep a prior day high, a prior day low. We're going to look for the failed break of that. And then from there, we will enter on a 5-minute confirmation looking for maybe a 15-minute target. We're going to risk 2R. That's our model. So you can write all of that stuff down. And in fact, you will. You can even pull up your journal. You could do your session notes. So we could say your model 123 definitions, right? I'm not going to bore you with writing it out because frankly, I type slow. So you could go ahead and do that for yourself right now. Go ahead, pause the video, take a look at that. And once you're ready, we'll continue. So we'll go ahead and start moving forward. While you're doing that, you play the video forward, right? You play the stream, the backtesting feed forward. You just got to get close to that entry time frame because right now, this is context. So we're looking at March, right? Let's see what the daily chart looks like. Been very bearish. So this is that Monday, right? This gap up. And obviously this is the issue with backtesting so recent. I remember what happens. We gap up, fade the gap, close below prior day low. Of course I can win a trade. Of course I can. But when I backtest, I personally like going a couple years back. I like going to like 2021, 2022. I find that there's a lot, and I traded different markets. I'll use ES if I'm trading NQ. But this is how you need to test your strategy when you're first beginning. In this video, the point is for you to see that you need to be able to identify where setups happen. And ultimately, it's going to help you not be so reactive to price. You're going to wait for price to show you something. And then from there, you can start to frame ultimately some sort of trade idea. So in this scenario, we see the gap up, right? We gapped up on the daily chart. And realistically, if we're bearish, we're going to flip below that opening price. That's a reasonable assessment. If this is a fake rally, right? We're kind of rallying all night. We have midnight open right here. Boom, kind of dip lower. So you could look at this right here. This right here is like Asia high, right? Or the opening high. You go here and you push above, right? So you'd want to see if we're going to fail above this level. That would be a sweep. When you're considering a prior day high sweep, think of something like that. Obviously, it's the same daily candle, but it is the previous day. So you could be focusing on something like this. The idea would be we have the sweep, so that's obviously level. That's very important, the higher time frame level. From there, you want to validate some sort of lower time frame confirmation. With the model that I'm trading, this is exactly what I would be doing. I would be classifying and defining these things before I ever press the button. So sort of play it forward. We see 8:30 happens, right? 8:30, we'll mark this out and then we'll mark out 9:30. And in this video, we're gonna go through one example. Just make it short and sweet for you guys, give you guys a resource, and then let you ultimately get after it. I'm not here to waste your time, here to provide value. And if you feel that, please leave a like on the video, share this with a friend who doesn't know what backtesting is. So you see, get close to the open. What do we have going on? We have this level right here. We will see if we potentially run this out. And then let's drop this to a 5-minute because we need that 5-minute confirmation. So annotating a couple more things here, we can see that we have this level, right? 5-minute gap. Whether or not we hold that is to be decided. So we kind of play it forward, play it forward, play it forward. And you see that immediately we dip lower, right? We haven't reached any sort of higher time frame target, but we did dip lower off the open, swept out these lows. Maybe your short entry could have been there, but for this model, we're specifically waiting until after 9:30. We get our sweep of the level. This is a little bit better for us to start to look for a short. We want to see the 5-minute start to confirm something. I would particularly be interested in us breaking below this 9:30 open. Play it forward a little. You see, okay, fair value gap. Then you get this inversion and this order block. That's going to be a good entry for us to potentially try. Potentially. Now, when you're doing this, you want to be mindful of the risk. So this is 44 points. It's not terrible. 1/6 of the total drawdown limit, something like that. If you wait too long, you might get a poor entry. If you're too early, you might get wicked out. So that's the risk you run. But for the sake of this video, we're not going to, sugarcoat anything or cherry pick it. We're just going to simply follow the rules of the model. So with this being said, we're looking for the entry on the change in state. We have this inversion right here. So we have 2 time frames aligning. And then from there, we need to look at 15-minute targets. So we do have a low right here. I do think that would be more than 2R. So I do think it fits. We'll go ahead and double check this. Right there, 1400, 765, that should be about 2R. And then you just kind of walk it forward and you see it hits. It worked. So that was the model. That's the model, okay? So where do I document this trade? I'm glad you asked. We're gonna we'll just stick with the chart right here. I think that's fine. But we are gonna draw out a few annotations before we save this chart, and I'll show you where we're gonna upload this. So we have it for our own, future study. So stop was pretty much above the highs. Put it like right there. And target was essentially like right there. Something like that, about 2R. Obviously, when you're doing this for your own trading, you want to be a little more specific. But for the sake of this video, we're going to basically just do this. I want you to go where it says copy image, this little camera. Trading view charts have these. You hit copy image. And then from there, we can go ahead and actually transfer over to, let me do this real quick. Don't mind me. Go to Notion. And now we're back on Notion. Notion's where you're going to document these setups. I mean, obviously you can do it in TradeZella, but I like using Notion. That's just me. For this, we're going to call this trade NQ short, right? And then date a backtest. You can say, today's date, the 22nd. I'm sorry. You do the NQ short. For the name of this, we can say that this was I believe it was March 1st. Let me go ahead and check this real quick on TradeZella. March 3rd, okay. So get back here. March 3rd was the date of the trade itself, but we did backtest this on the March 22nd. Performance, this was a win. Risk parameter, we could say this was a 2R. Strategy type, this is where you could go ahead and define it. You could say this is an opening drive. It went off the open, right? We can also define this as a sweep plus, the inversion. Or if you want to put it really simply, what I like to do, the model I like to trade, is that. That's what I would define this as. We had a higher time frame level. There was a couple continuous sweeps. It's still playing with that higher time frame level in mind. Lower time frame confirmations, we saw two of them. And then obvious target, that's part 3. It doesn't take a complex system to work. It takes a system that is something you're going to actually stick to work. So we'll go here. And from here, essentially what we want to do is you would go here and you would upload your chart. There's a little template that already populates in here. So I upload the trade chart. You say premise, you'd say Monday or new week gapped higher, pushed and failed above highs, ahead of open, ahead/at open. So I'm just clearly defining what it is that I did, or what was my idea rather. My plan, I was saying look for essentially the change in state. That was essentially the trade I was looking for. I was looking for that reversal signal. So you can call it whatever you want, the inversion, whatever the idea is that sticks out to you. To me, I see it as just that flip. So it could be the opening price flip. I want you guys to really understand that there is no system that is so unique to anything else. Everything that you can come across is derivative, meaning it comes from somewhere else. You can see multiple influences of every style on any sort of chart. So don't ever think that you have the golden ticket. You can call it what you want. We can call this opening price flip. Is it really that different? Red to green, I'm sorry, green to red. It was a green to red move, so you could call it a green GTR move, right? However you want to call it. This is up to you. This is your strategy. It's not mine. I'm telling you, this is how you should be looking at this stuff. So with that being said, you can also apply fixed 2R, whatever. Explain your process. What was your plan? Did you get it right? Did you get it wrong? Explain what you thought. And then your result. This was a swift win. It could be a grind. It could be slow. It could be, you could have maybe got stopped out break even. We didn't even adjust the stop. It was fixed 2R in this model. Additional thoughts, notes, and then you could put strangely, whatever, right? You thought maybe because of the gap up, it should have held. Maybe you thought something else. Maybe your bias flipped and you had to adjust the plan. Put it here. Document this. This is a resource that I'll have available for all of you guys in the free Discord. Just join. Say, hey, can I get that backtesting doc? And you'll have it right your way. So this is the process that you need to go through, whether you're a student of mine, whether you're just someone coming across this video for the first time. Follow this process. It will genuinely help you understand price in a much deeper level than you ever thought was possible. Because not only are you able to, number one, assess multiple time frames, you can also evaluate, does this happen immediately? Does it take a couple candles? How long does it take to hit the target? And then from there, you can start to determine when you should be timing your entries. Now, all of this stuff, unfortunately, will be revealed to you through the hard work. So you have to get on the charts. And with that being said, I'm going to leave you here. If you enjoy this type of content, leave a like, share this with a friend, subscribe. And if not, well, I'll see you next time anyways. So take care.